Hello and welcome to this month's version of Hear the Lion Roar. I'm Liz Wilkie and this is my colleague Chris Mason, Strategic Partnership Manager. How are you today, Chris?
I'm really well, thanks, Liz. How are you today, more
I'm,
importantly?
I'm great. I'm great. I'm really excited for this session. Post budget, we have a real buy-to-let treat for you. We're joined by Head of Sales, Jason Wilde from Paragon. How are you today, Jason?
I'm on top of the world. Yeah, really good. Thanks, Liz. Yeah, nice to meet you and Chris. Thanks for having me.
Brilliant,
No
brilliant.
problem.
That's great. Can you tell us a little bit about yourself, please, Jason?
Yeah, I've worked at Paragon for I think it's nearly 18 years now, actually. So I started off at Mortgage Trust, which some of you may well have heard of. Based down in Epsom, and then in 2009, during the credit crunch, we were all kind of taken under the Paragon banner, and I've kind of worked there ever since. So originally out on the roads, as you may guess from my accent, covering Essex and East Anglia, and then in 2019 moved to national sales manager and then head of sales. So I had up a team of 12 field-based BDMs.
Brilliant, brilliant. Well, Paragon really are the go-to buy-to-let specialists, particularly in the locale where I live, because pretty much everybody works at Primus or works at
I don't.
Paragon. You might be able to tell by my dulcet rummy tones. But yeah, what we'll do, we kick off. We've got some questions for you today. Obviously,
Yeah.
really talking about at the moment about what's happening for landlords, what support that will be available. So over to you, Chris. Do you want to kick us off?
I certainly can do. And Jason, really good to meet you as well. So I think it'd be a good starter for 10 would be how have things been in 2024 for buy-to-let overall?
Yeah, I'd say in general, it's been a good year. There's plenty of ups and downs, but for as long as I've worked in buy to let, I pretty much think most years has always been an obstacle somewhere down the line. And one thing that we've seen from certainly the industry and landlords is that they are resilient. I think the big challenge that we've been faced with this year has been ICR calculations. So obviously that's had a potential big impact on landlords' ability to remortgage. Naturally, for your advisors, they're probably relying more on PTs, which let's be fair, that's then a drop in income for them. And I think majority of that has been driven by affordability and ICR calculations, which have been easing, and up until recently when swap rates have started to spike up again, and rates have again started to kind of creep up. There were some real green shoots when you're looking at the types of products that were out there. But invariably, it's been another really, really good year for buy to let.
Good, excellent, excellent. And I think those ICR calculations, I noticed that they had improved, but with
Yes.
the post-budget, with the slight increase in rates and lenders repricing, that's obviously had an effect, hasn't it? So
Absolutely has, yeah, and it's something that we're aware of. Obviously, we're under PRA, so we're kind of bound by the affordability requirements there. But I think this is where you kind of started to see, lenders introducing larger fees, to load on the fee, which therefore reduces the initial rate, which has been helping with some affordability. But from us as a lender, we've kind of got products that have got no fees, we've got products that have got fixed fees and a higher percentage fee, because for everyone who wants to squeeze as much as they can out of it and needs a high fee and a low rate, there's another landlord out there who doesn't want to pay a fee at all, or they want to cap their fee at a particular amount. So again, with that, I think as we move into next year, I think you're probably going to start to see maybe the end of those kind of 7% fees that had been kind of out there. Maybe even the 5% fees may start to disappear as rates hopefully slowly reduce.
yeah.
That's good. That's good. I like that you referenced some real green shoots out there as well. But tell us, Jason, what sort of impact do you think the second home surcharge has given to landlords?
Yeah, I haven't spoke to anyone yet who was expecting that to come in. So I think it pretty much caught everyone by surprise. And I think that there was perhaps some choice words behind closed doors from many landlords, that kind of evening. But invariably, what we've seen is that I think what probably has helped in some ways, and it may sound a little bit strange, is that there's no lead-in period on this, or there was minimal kind of lead-in period. I think if we were going to extend this out till maybe kind of next year, I can imagine there being another kind of mad rush of, trying to get completions through by that date. So whilst it seems unfair that landlords have effectively just got to swallow that cost overnight, borrowers and brokers that we'd spoken to, there were a few deals where I think landlords said, that's it, I'm not going to buy. But once the dust settled, it was a case of, well, okay, this is the figure that I've got. Can I renegotiate? Can I make this deal work for me? And I think, the way that we kind of look at this is that, when they introduced the surcharge originally, when it went from effectively 0 to 3% for landlords, again, there was a bit of a knock-on effect there, but it's a one-off cost. It's just effectively factored into it. And we've looked at some data in Scotland when they've increased theirs, and invariably it's not really made a huge difference to landlords' appetite. It's really a case that, like I say, they're just factoring that into their cost. And I think often they're going out there and effectively saying, look, I'm prepared to kind of pay X amount for this particular property, and try and factor in the fact that they will have a slight increase in their stamp duty. So it's kind of here to stay. Do we like it? No, but we can't really do anything about it. And as I touched on earlier, kind of what we tend to find is that landlords just effectively just end up adjusting to it. And that's what we are seeing. And strangely, we've actually noticed this month the number of purchase applications compared to remortgage has been on the increase this month. And even a couple of days after the announcement within the budget, we were still seeing new purchase applications coming through, which is really encouraging.
Brilliant. And you referenced the increase in purchase business last month against remortgage business as well. Would you say within the buy-to-let market, are there any other kind of differing trends or kind of growing markets that you've seen this year at all? I know that's a recent trend, but anything you've seen over the course of the year, Jason?
Yeah, so one of the big sort of things that we have seen is, landlords kind of chasing higher yielding properties. So, kind of that sort of drive towards kind of student lets, HMOs, whether you're talking about a relatively small kind of 3 or 4 bed, with, 3 or 4 students in residence, right up to your kind of large, 15 to 20 bed HMOs. We've seen a real drive towards that kind of marketplace because effectively from a landlord's point of view, you can probably run at 60% occupancy there and you're more than clearing the mortgage payments. We touched on earlier ICR calculations. ICR calculations on HMOs generally tend to fit most of the time. And I'd worry if someone was buying a HMO property, even at 75%, and they were struggling on a standard lender's ICR calculation, I'd worry why they were buying that type of property. Normally there's plenty of extra room in there. So that's kind of one thing that we've seen. As well as that, a lot more kind of people looking at, sort of semi-commercial type deals, sort of looking at these kind of, sort of commercial unit downstairs with 2 or 3 flats above, kind of looking at funding for those types of properties. And really what we normally see with this is that landlords are just looking at where are the yields. If that's what I'm buying for, kind of yield growth over the years, then you need to be looking at those kind of multi-unit, multi-occupancy type properties, or perhaps those more sort of semi-commercial. But again, they don't come without the complications. And the one thing that we'd say to any landlord looking at getting into there, you just need to fully understand the market you're getting involved in, because I appreciate there's various landlord forums out there, and we read the forums, as I'm sure many people do. There's a lot of good information on there, but there's a lot of duff information from people. So it's really just understanding that marketplace you're getting involved in.
So looking at that marketplace, which is really interesting because we've seen sort of quite an increase of late really in HMO queries and inquiries. Obviously, for all the reasons you've said, like the better affordability, increased yield and return for the landlords. What sort of advice would you give to a broker that was looking to get into that sort of, to place that kind of business, and what sort of, not hand holding, but what other considerations or support can you offer?
Yeah, I mean, the good news is there are loads of lenders out there that lend on HMOs now, and most of our criteria is fairly kind of similar. You will find that some are restricted at some numbers. We become very competitive once you start looking at those kind of 5, 6 plus rooms on HMOs. So there's plenty of options out there. And I think one thing that I'd always say is just kind of understanding the types of properties that they're buying. It's fairly common that we and other lenders will get an application that comes to us. It comes to us as a standard property. Surveyor will go out there and value it as a standard property. And then when the valuation report comes back, we get told, well, they're going to use it as a HMO. And the issue with that is the surveyor saying, well, I didn't realise that for starters, but I can only assess it as what it is at the moment. So anyone who's looking at mortgaging a property that will be used as a HMO, you need to work with your lender on that. You need to say, look, okay, it's not fully compliant at the moment, but here's a list of what they need to do, like fire doors, smoke alarms, etc. It's going to cost X amount. It's probably going to take, 2 weeks to put in place. Is to send that through to the lender so they can pre-arm that surveyor with that type of information. It doesn't always work, but we've had some success with those kind of things there. And I think also it's a case of just understanding some of the nuances in terms of, it's quite common and they say quite common, I say it's very common, that a property can have a HMO license in place. So an existing HMO, if you've got a broker who's got a client who's buying an existing HMO, there could well be a license in place, which is great because it tells you that it should have been compliant for, kind of all the health and safety that runs alongside with owning HMOs. But it doesn't tell you that it's got the correct planning in place. So believe it or not, the planning departments and HMO departments within local authorities do not talk to each other. So again, it's very common that you can have a HMO license, and when it gets to legal stage, we assume it's there. The broker probably assumes it's there. Everyone assumes it's there until solicitor then flags, oh, sorry, they haven't got the correct planning for this to be used as an 8-bed HMO, for example. It's not normally the end of the world. There's solutions and ways of getting around this, but normally time's of the essence. And when that lands on the broker's desk, because naturally the solicitor seems to refer them back to the client, back to the broker, lands on the broker's desk for them to find a solution. And you're looking at things like certificate of lawful uses, or how can you evidence established use. It's not normally the end of the world, and it can be put in place, but you could be looking at 2, 3, 4 weeks of delays there. So my advice for anyone looking at placing HMO business, if it's an existing HMO, is to get the client solicitor to check that it has that relevant planning in place as quickly as possible, because it will be required. And I'm not talking about Paragon here, I'm talking about pretty much most HMO lenders will require that in place upon completion. So that's probably the best thing that I can say regarding that. And look, the bottom line is, we speak about HMOs on a daily basis, as do pretty much every other HMO lender. If you're not sure, pick the phone up and just chat to the BDMs, just chat them through it, and they'll tell you, what you need to look out for in this particular marketplace.
Brilliant. That's a real golden nugget. And do you tend to find that your typical landlords for your HMOs are limited company landlords, or a bit of a
Well, we do, yeah. Majority of purchases that we get through at the moment are limited companies. Naturally, that's on the back of the tax changes that are kind of phased through. But also, we find more and more landlords are seeking professional tax advice, that perhaps they're bringing children on as shareholders with a plan for inheritance, kind of moving forward. So limited company is very, very popular within this marketplace, certainly for purchases on the back of that. And the one thing I would say as well is that, look, every lender's got their criteria in terms of what experience you require a landlord to have. And if you look at our lending guidelines, then that's what they are. They are guidelines. They're not set in stone. We ask for at least 2 years experience. So what we're after on this, we're after one applicant having at least 2 years experience. 2, 3, and 4 could be out and out first-time buyers, first-time landlords. We're okay with that. When we're talking about buy-to-let experience, certainly for HMOs, our underwriter will look at more so what's relevant experience, because you could have a situation where you've got a borrower who's owned a studio flat for 2 years and they want to buy a 6-bed HMO. You've then got someone who's owned an existing 6-bed HMO for a year and they want to buy another 6-bed HMO. It's only natural. You're probably going to want to lend to the one who's got that relevant experience on there. So the one thing I would say is that anyone who's got any landlords looking at buying or getting involved in HMOs, if they haven't got that 2 years, that's where you pick the phone up and you speak to the BDMs. We've had first-time landlords who happen to own a letting agents. Again, why wouldn't you lend to that type of landlord? They understand the nuances of running HMOs, surveyors, etc. So we can do it, but I'd say if it's less than 2 years, if it's relevant experience, then by all means pick the phone up.
Brilliant. That's really informative. And I think you may or may not have mentioned, but I think I've read somewhere around your refurb to let product that you've got at the moment. Just wanted to understand how that worked, because that sounded quite unique in the market, really.
Yeah, so it's certainly been gathering momentum on this side. So I mean, in essence, it gives someone the ability to buy a property that's not quite suitable for letting in its current format. Whether or not that's a probate sale that's got your old kind of sort of kitchen and bathroom that needs updating. Structurally, the property's sound, but it needs someone to go in there and effectively just kind of rip it out and do the refurb. So we'll do that for a standard property, or if someone wants to convert through to a small HMO, we will do that, as long as there's no anything to do with kind of changing the footprint of that particular property. But putting stud walls up, etc., should generally be fine. So the way that it works is that an application would come in, surveyor will go out there, and the surveyor will be pre-armed with a list of these are the works that we know need to be done. So I touched on that earlier when I was talking about conversions from standard through to HMOs, but on the referred to let, that's exactly what they're after. So it doesn't work the same way as bridging finance, albeit you can roll up the interest on it. But the reason why it doesn't work the same as bridging finance is it's fully underwritten, and there's also a guaranteed exit offered at offer stage. So if the case comes in, we get a list of the works that are required. Surveyor will go out there. They will put a value on it in its current condition. They will then put a value on it in its refurb condition based on the details that are going through. And like I say, you'll get a mortgage offer for the initial purchase application or remortgage. It can be a remortgage as well, but you'll then get a guaranteed mortgage offer for an exit onto standard buy-to-let terms as well.
Okay, it's really interesting.
Yeah, so again, it works really well, and you know, I'd say if anyone's got a case that's gone to a lender, maybe another lender's kicked it out because it's a little bit tired on the inside. For example, bear in mind that we've had properties that are currently let that we know that have been declined. We've declined some that are currently let, and sometimes that's a bit difficult to get your head around until you then look at the internal photos. You think, yeah, it's quite alarming that there are some people living in accommodation like that. So it doesn't necessarily need to be an empty property, one that just kind of needs, you know, updating, refurbing, anything along the lines of that is tailor-made for that type of product.
Great.
I'm a big fan of that product. It's very popular amongst the brokers and amongst the industry across the board, isn't it?
Yes.
So something else that we wanted to talk to you about, because we've got lots to talk to you about, is have you obviously been such a big buy-to-let lender? Have you noticed any geographical changes in where landlords are looking to purchase? You know, we read bits and pieces about people going into London, coming out of London, going to the north. Is there anything you can tell us about that?
Yeah, I think often it depends exactly what the landlord's looking for. If they're looking for capital growth, then the more southern or closer to London, that does still seem to make sense. However, again, what we see is that landlords kind of diversifying, you know, chasing those yields, and certainly when they're factor into the account, you know, the additional stamp duty that they've got, they're looking at the purchase prices associated with it, and we have seen a big drive towards the north. You've got, you know, powerhouses up there, you know, Sheffield, Manchester, Liverpool, you know, Newcastle, you know, Durham, really strong university places as well. And we have seen landlords kind of effectively just start to target those areas that when they're looking at the types of properties that they can buy up there, they're not necessarily expecting huge capital growth, but they're expecting high yields and yields upwards of 8, 9 towards 10%, which is very, very rare if you're focusing down south. So it's a shift that we have seen. I think when you compare the stats, we had a report that came out, and I think when you compare it to 2014, it was predominantly London and south, but then when you look at it now, it's predominantly kind of the north, northeast, northwest around there. So yes, it's very, very popular.
Brilliant.
But again, on that, I was just going to say, sorry to interrupt, but you know, in my time at Paragon, I remember it's not a million miles. I think it's in between where we both are. That we seem to have some landlords that were just piling into Northampton. Around sort of Kettering, around areas like that, because they were looking at the types of properties, and I think there seemed to be a few kind of particular areas there where prices were a little bit low, but rents were still high. So we had a number of landlords just targeting those particular areas, and I think that's invariably what they tend to do. They tend to, you know, research where's the next best thing for my money.
Yeah, and I think that Northampton area actually is not too bad to commuting to London, which sounds like a long way, but it's not actually that far. So
absolutely,
I'm not surprised by that.
Yeah, even a place like Peterborough as well. I think Peterborough to King's Cross, I think it's just over an hour. So again, with that, it kind of makes sense. There's been a lot of developments up there, and again, you know, landlords have been you know, looking at snapping those types of properties up.
Excellent. So what do you think, what's going to be new in 2025 for Paragon? Then, you know, you've talked about the focus on HMOs this year. You've talked about the refurb let products as well. So you've got some real USP, some unique parts of your proposition. What's going to be new for you next year?
So the big project that we've been working on for a number of years now is a whole new origination system, which will improve the broker journey from initial inquiry right the way through to completion. And this will cut down the list of requirements. Our current system that we've got, some brokers really like it because it's quite easy to use. It's relatively quick, but in essence, it's almost a data capture form with a credit search involved. It then gets looked at by underwriting. The new system, which should be live towards the end of January for market wide, very intuitive, talking to lots of external parties like Companies House, etc. Will pull all the directors through, sort of home track, giving a rough estimate on what they think the value of the property is, etc. So, and in essence, what this will do is then create a lot less work for the underwriter because of the amount of information that they've got there, which therefore the natural knock-on impacts on that should be documentation should be a lot less, questions should be a lot less on the back of it. So it should make the whole process a hell of a lot smoother going forward. So that's certainly something huge that we've been working on for a number of years. A lot of investment's gone into it, and will certainly change how a lot of people have dealt with Paragon, and certainly the perception of our process once the case is in. So we've got that there, and look, we potentially got this thing regarding EPC improvements, which we're still waiting to get clarification on. Is it going to be based on EPCs or is it going to be another thing there? So I think you'll find that lenders like us are kind of looking at this and saying, well, we need to have a plan in place as to what we're going to do for how do you encourage landlords to improve those D and E properties for new applications, but how do you encourage your existing book as well? How do you encourage those kind of going forward? So there's plenty of things that are certainly on the go in the background regarding this.
Brilliant.
Exciting times
Yes.
ahead. And we were talking the other day about how there's still something like 16 applicants for the average rental property.
Yeah.
Which isn't quite as high as it was post-COVID, but there's still lots of opportunities out there. And I know you've given us some real good nuggets around HMOs and things like that. But what opportunities do you see coming down the line for brokers if they're not really working in the buy-to-let space at the moment? What opportunities do you think there are going forward?
So next year, great opportunities is the remortgage market. We touched on this earlier about ICR calculations. We're hoping that, if we get to, I think the biggest months next year are June and September, which I think are some of the biggest months on record for remortgage opportunities that will be out there. You'd hope by then that would be in a lower interest rate environment. You'd hope swaps may be a little bit more settled than where they are today as we're talking. So naturally, rates should be a little bit lower and ICR calculations should work. So there's a huge opportunity there for remortgage business, but also for product switch as well. And one stat that we've got is that we see 41% of our switches over the last 12 months have not only come through a different firm, but a different broker than who submitted the original deal, be it 2, 3, or 5 years ago. So it's that kind of refinance, product switches. But as well as that, on the remortgage side, again, opportunities that you've got there, you've got people coming off 2 years and you've got people coming off 5 years. And the people coming off 5 years are probably going to have a slightly higher rate to go on to, but there will be people coming off 2 years, which will be after that kind of mini budget a couple of years ago when rates were a lot higher. So you will have some landlords there that will actually be going on to lower rates. And again, with this, I think a perfect opportunity for landlords there is to, any client that you're looking at remortgaging on a buy-to-let basis, is to just ask when they had their last EPC carried out, because as far as they're aware, their EPC on the property may be a D, but that's because they bought it 8 years ago. But since then, they've gone in there, they have done works to the property. And I think it's always worth getting an up-to-date EPC certificate, because naturally they could qualify for a slightly lower rate with many lenders. But what I will also say is that, hopefully by June, September next year, we will have firm guidance on what these requirements are for the energy improvement. And it's then having those conversations with landlords. Well, how are you going to fund these particular works to the property? And that's a great opportunity for further advances and further borrowings on any remortgage business. So huge opportunity out there. And I certainly think, and it's going back to what we touched on earlier, that limited company is kind of here to stay now for landlords. So, and there's lots of kind of nuances, in relation to that, whether or not, you've got clients set up with voting shares, non-voting shares. Every lender's got their own criteria on that. And my advice to advisors, if you're not firmly entrenched in that, but you are looking at getting involved in that marketplace, is just to reach out to as many lenders as you can and just say to them, what's your criteria in relation to this? And also things like, you refurb to lets, there's various products out there, HMOs and stuff like that. Just familiarize yourself with those, because those are growing marketplaces.
Fantastic. That's brilliant. I'm sure you've got your BDM specifically would love to go out and engage with the brokers.
Absolutely.
And talk through anything at all, wouldn't they?
Definitely. Yeah,
that's brilliant. I feel like we've covered a real chunk of buy-to-let coverage there in a short space of time.
Yeah,
thank you so much for your time today, Jason. Chris, have you got anything else you want to ask Jason?
No, I think that's been really interesting, to be honest. I think the buy-to-let market sometimes, when it's particularly post-budget, can feel like it's threatened a little bit, but actually
Yeah.
you've given some really key information there about how landlords can maybe flourish and develop in 2025. So I found that
Yeah.
really interesting. Thanks, Jason.
Okay,
No,
no,
that was
absolute
brilliant.
pleasure.
Thanks,
Yeah.
Jason. And we look out, everybody. We've got a little link that's got some tips and hints from Paragon as well, which we'll embed shortly. Thanks so much.
No, thank you very much. Thank you.
Cheers.
Thank you.
Thanks very much.